Warren Buffett is a name synonymous with long-term investing, known for his steadfast approach to the stock market. Yet, recent reports suggest that the Oracle of Omaha might be considering a significant shift, potentially taking an exit from certain stock market positions. This has left many investors asking, why now? To understand this, we need to look at Buffett's investment philosophy. Warren Buffett has always preached the importance of value investing, buying quality companies at a fair price and holding them for the long term. His strategy has been remarkably consistent over the decades, leading to immense success for his company, Berkshire Hathaway. But in the current economic climate, even Buffett seems to be reevaluating his approach. Recent data shows that Buffett has been trimming his holdings in several major companies. For instance, Berkshire Hathaway has reduced its stakes in financial giants like JPMorgan Chase, Goldman Sachs, and Wells Fargo. Traditionally, these are the types of investments that Buffett would hold on to for decades. So what's different this time? One reason could be the overvaluation of the stock market. As of 2023, the market has seen significant highs, driven by factors such as low interest rates, government stimulus, and high investor optimism. However, these factors have also led to concerns about a potential market bubble. Buffett has always warned against irrational exuberance in the market, and this might be a time when he believes the risk is outweighing the reward. Another possible reason is the changing economic landscape. The global economy is currently facing numerous challenges, from inflationary pressures to geopolitical tensions and supply chain disruptions. These factors create a level of uncertainty that might make even a seasoned investor like Buffett reconsider his positions. Inflation, in particular, erodes the value of future cash flows, which could lead Buffett to reduce exposure to companies that might suffer in a high inflation environment. Buffett's age might also play a role. At over 90 years old, he might be thinking more about capital preservation than aggressive growth. This doesn't necessarily mean he's exiting the stock market altogether, but rather that he's being more selective about where to allocate capital. He might prefer to hold more cash or invest in safer, less volatile assets like bonds or even in private businesses that aren't subject to the daily swings of the stock market. Let's not forget that Buffett has always been a contrarian investor. When others are greedy, he's fearful, and vice versa. By reducing his positions now, he might be positioning himself to take advantage of opportunities when the market eventually corrects. Historically, Buffett has capitalized on downturns to buy high-quality stocks at discounted prices. If a market correction or crash is on the horizon, Buffett would want to be ready with cash on hand to make substantial investments. What does this mean for the average investor? Buffett's moves could be a signal that it's time to be cautious. While not everyone has the resources or insight of Warren Buffett, the principles he follows, like not following the crowd, investing in what you understand, and being wary of overvaluation, are applicable to anyone looking to navigate the current market conditions. It's important to note that Warren Buffett's decisions are based on his unique perspective and access to information. While his moves are worth paying attention to, they shouldn't be the sole basis for your investment decisions. Each investor has different goals, risk tolerance, and timelines. In conclusion, Warren Buffett's apparent exit from certain stock market positions could be a strategic move driven by market valuations, economic uncertainty, and his desire to preserve capital in an increasingly unpredictable world. As always, Buffett's actions remind us to stay informed, think long-term, and never invest in something we don't fully understand. The Oracle of Omaha might be shifting his strategy, but his core principles remain a guiding light for investors worldwide.